Hello, this is Dave, and welcome to Equities Story. I'm with the wonderful Wolf, and welcome everybody. It says actually it says Ask the Analyst. This is Trade Watch, but general advice warning is exactly the same. This
Are you
is
just testing everyone to see if they actually read, Dave? Is that what the thing is?
well, you know what, we do have Ask the Analyst tonight, so it's best service that we do, I think, on Equity Story. So if have got any stocks and you're a little bit nervous and you're not too sure what to do, join us tonight at 7:00 and ask any question you want. We're the only, I think there's maybe one other, but I think there's only very few websites that actually offer that service, because I don't think most of them have the ability to do it, to be honest. So, join us tonight on Ask the Analyst Live. Yeah. And this is obviously just general share advice and not personal advice. Oh, Wolf.
Yes.
Guess what I've got behind me?
You've got something, I don't know. Oh, big bear. Yes. Okay. I know where you're heading with this.
Well, it's a lovely bear, isn't it? Right.
I think it's good.
So I've got a question for you. Mm-hmm. You read, we had a good look at the markets before we talked, and the markets are holding up at the moment absolutely fine, right? The XJO, I do think it's going to go down a little bit more into June. I think, we've seen the high. I think, you can see in NASDAQ sort of breaking out over resistance, and, the Dow just starting. So the markets look a little bit strained. I think it's going to be hard push to go higher. Like I said, I think we'll go down a little bit into June. But what's your general view of the markets with so much negativity? I mean, gosh, you go on CNBC and it's a different American stock bank going under every week, or they're trying to bail them out. It's extremely worrying for the mums and dads out there, Wolf. So how do you just mentally sort of ignore that and just concentrate on the companies that you like and what they're doing? How's your mindset?
It's a very good question, and there's probably three things I look at here, right? Obviously, we're following the momentum in the big indexes out there. So Dow, NASDAQ, obviously XJR are here, and like you said, they are trading still above. So from that point of view, it's a sigh of relief at the moment. Then I look at my stocks, and I'm picking upgrade stocks pretty much in my portfolio. So I'm still sort of relief here, right? So that's holding up quite well. In fact, probably beating the market most of the time. So that's good. Now, then you read all this other stuff that's going around the globe. The banks, the inflation, the interest rate rising up, the Ukraine. There's just a number of things that are going behind the scenes. Whether you call it noise, pretty strong noise for the moment, I suppose, because the indices is holding up. Whether that noise will turn into something greater and bigger, that's the stuff probably I am more worried about, right? So I am nervous for sure, but I'm not panicking. But I have been talking about, just having a look at your portfolio, see if there's any, dead branches out there that you need to pull, or the weeds that you got to pull, and just have your portfolio position robustly enough that if there is a bit of turbulence, you can get out of it fairly unscathed, right? So that's how I'm looking at it, taking some profits, because, we're coming out, maybe, read something like about the Zaporizhia nuclear plant in Ukraine. You think, oh my God, there's going to be a possible incident or accident, whatever you want to call it. So, you think to yourself, oh my God, if that happens, that maybe we're going to have a bit of a crash. But it's not happening for the moment. So I'm still okay. I'm not going to jump the gun and get out of everything because I think what's going to happen. No, I'm going to wait for the facts to, come through and act accordingly. So because we're active investors, we're gonna play the charts, play the stories, really.
So I should think, really, Wolf, if we do start breaking on the XJO below the water level, or we start breaking that 7,000, that's a catalyst to when we start getting a little bit more nervous. If we start breaking the down, maybe getting below 33,000, if the NASDAQ can't go on with it, at the moment it's looking like a recovery, right?
Dave, let's just forget about NASDAQ. It's not called NASDAQ. It's just called Apple and Microsoft. That's what it is, really. I mean, there's no NASDAQ. There's just two stocks that's driving this whole place up.
Well, let's have a look at Apple, and you can see some of the quality companies that looking really close to record highs. Yeah,
Yeah, exactly.
And equally Wolfie, and you can look at Microsoft as well.
3 trillion
Again,
company and what 2.5 trillion company. I mean, that's the two companies that are holding everything up.
and you've even got Meta, which has been recovering right from
Yes, that's
lows.
right.
So
Yep.
so I agree. I mean, the big stories out there are holding up very, very well. And I must say, Wolf, we did very, very well because we put these on as a suggested buy at the end of last year as basically safe havens. It wasn't really a Cincinnati call, more of a like storage of wealth, storage of money, and I think that's paying off quite well.
Yep.
What I would say, Wolf, we'll go through the announcements today. So yeah, so generally speaking, guys, at the moment, we're watching the market, watching every day at the moment until we see really bad price action. We're not sort of panicking, or we're not sort of at the moment we're following the good stories and still following the trends.
Agreed.
Wolfie, I want to talk about a good story and a good trend. NXD, not to be confused with NXT.
Yeah.
A company in education.
Yes.
Talk us a little bit about this company and the announcement they put out today, please.
Actually, put up the announcement because it's interesting. Look, the fund really liked the announcement today, so I've been accumulating this, but go for it as well if you like the story. I think this is an up and coming story, especially when you read the announcement and you read the previous couple of announcements, and it's an amalgamated story because it's a merger between I think a couple of companies before Red Hill Education and so on. So for me, look at it. You've got highlights here, Dave, because it's very, very important. So NextEd continues to achieve record new international students enrollments. And we know that because we've heard from some of our actually members, Dave, they're saying that there's just students everywhere, right? International students everywhere, full classes and everything like that. So then you read the next line. March 2023 saw 5,000 English language students actively studying, more than triple pre-COVID peak student numbers, and almost 8.5 times the 600 March 2022. You can see they are flying very, very hard, pretty strongly at the moment, right? Plus, they're saying that underpinning strong revenue growth in FY 2023 and FY 24. The last bit of it is the most important for me. Expected profit yield strengthening due to increased classroom utilization. Now, basically, that's the leverage they're getting out of this, right? They're building the classrooms, they're building the capacity. They're going to feel that if they can fill the classrooms, you're going to get a big boost to the bottom line out of it. So for me, I've worked it out previously. Before this, I worked it out when I was looking at this company maybe about a month or two ago on the previous announcements that they're going to have strong growth. They're going to be trading on around 30 times, right? With this now announcement here, expected profit yield strengthening due to increased plus, that could potentially drop. So for me, I don't mind buying companies a little bit more expensive, but they've got really strong fundamentals behind them and upgrades almost, right, on this sort of strength. So for me, that goes onto our upgrade list. And like I said, I'm buying this. I think this has got the next 12 to 24 months potential that we could see good returns out of this.
Wolf, also, this company is a little bit, I don't want to say recession proof, but it's, you think even if we do get a strong recession in America, or maybe times get a little bit tougher here, these foreign students, it's a consistent market, isn't it?
It's an extremely consistent market, and we've got a very strong name in education. And Dave, the other things I think is super, super important right now, there's just turmoil going everywhere. Where's the safe haven, Dave? Australia. Nothing happens in Australia. We're like the safest bloody place in the universe. So everyone just comes together because it's nice to live, pleasant weather, pleasant people, nothing of this craziness going on in Europe, nothing of this partisan fighting in America with all these shootings and everything else. Where would you, if you're a parent, where would you send your child to study? Australia, Dave.
Well, it's funny you should. It's funny you should say that, because one of my boys, he's been on the AUSA tour, like basketball tour in America, and saying, "Dad, I love it there. I want to go. I want to go and live there." And I said, "No way. I mean, it's too dangerous."
There you go. There you go. So for the I know probably a majority of people, I mean, Australia is a very, very attractive place to send your child to study. So I think this is this is a story really to put in your portfolio, I think, for the next 12 to 24 months.
All right. Well, if you don't mind, I'm going to do that. I'm going to put it
Yeah,
in
go
as
for it, because like I said, I've already bought my little bit, so you're probably even going to get it cheaper than me. So go for it.
I'm going to put it as a US growth, and it's an investment. It's actually trading. What sort of market cap is it trading at the moment, Wolf?
Let me have a look. Like I said, it's not super cheap, but if they can keep coming up with these upgrades, it could look cheap very quickly. So let's have a look. It's profitable as well, which is nice. Like I said, the leverage could be quite interesting here if they utilize the classrooms. So every space they put it, probably every student put in a classroom probably adds quite a bit to the bottom line. Eventually, if they do it in bulk, of course. So that's 361 million. It's not too bad,
So really a small cap still. So plenty of room to grow.
Plenty of room to grow. It fits my sort of investment criteria because it's I love my small cap. So for me, that's the time to pick it up, and we can ride it maybe to that $500 million mark. If I'll be happy.
Yeah, definitely. So we're getting a sort of long-term story on this. So we're happy to, if it goes below 127, we will get out. Maybe 124, but then we'll get back in if it gets back over trend, right? So
yep.
I think if that happened, Wolf, that would be some serious sort of catastrophic or
I think before then, you would have to probably see some negative fundamental news, I think, out of the company. So I think we're, when I say not 100% safe, but the risk are low to get to that 127, I'd say, unless obviously fundamentals. But if fundamentals change, we'll be out before then.
Yeah, I think, and we'll just start with a 250 target price, and then we'll work it out from there.
Bloody hell, Dave! That's bullish. I'm happy to start with a $2 first, which is what 15%, and then let's work ourselves to $2.50 after that, shall we?
Nah.
God.
Come on, 3 years. Well, listen.
Yeah, but that's just a step by step, so we can follow the story.
All right, okay.
Maybe the first one 2, then move on to 250, then we can move on to 3.
All right, I love it when you're so dominating.
Oh, well, I have to sometimes put you back in the place.
All right, well, so thank you very much for that. So I think it's an interesting idea. It's an interesting story. I mean, and what I would say, it's lightly traded, ladies and gentlemen. So don't worry if you can't get it today. There'll be a rough day, and you can most probably get back at 150 one day, right? So, but just an idea for you.
Yeah, look, I love the fact that it's just a gently swinging uptrend, and that's the sort of stories I love putting in my portfolio, and then we can keep for 12 to 24 months and see how we go. It could, this could be a long-term portfolio hold if we play it right. So let's see, let's hope, and yeah, nice story to add.
All right, so we don't talk about punts much, Wolf, because we don't do much. But is polymetals, is this a punt? The old Endeavour mine that they've taken, it's trading at a 16 million market cap. I don't know how many options or how many shares they've got on issue, but is there a punt here?
Possibly, Dave. I mean, you say you don't punt on poles. You've punted on pole right there. So, you've done a good job. So far, you're on a winner. But this one could be another little winner, because these guys, and I've talked about it maybe a week or two ago, because I like the chart. We saw it breaking up. And these guys have picked up the Endeavour mine, an old mine that was going from about the 70s to the 90s. So it's been around for some time, but it's been on care and maintenance for some time because of the lower prices. And it looks like these guys have picked this up on the cheap, right? This used to be a very, very good mine, lucrative mine. So for me, and look at some of the drilling that they're going to do. So, there could be some excitement out of the drilling coming through, restarting the mine, because I'd say the previous owners have spent millions of dollars put into the, to get this mine up and going, then to produce, to make money on this. So it's almost like one of those CAA type scenarios where, Keith comes in, buys something that's been on care and maintenance for some time, really on the cheap, and see how it goes. And it still could be very lucrative for them. Market caps are like 16 million or 17 million bucks. I'd say, yeah, could be a little punt. Play the chart type of stuff.
All right, high risk.
Very, very high risk, but you know what? It's not bad.
Okay, all right. So if I'm just going to put this as a high risk punt.
Yeah.
So
you just got to put a really tight stop on this.
So,
No
you know, looking to buy this under 0.37. You're trending it. It's certainly a micro cap. It's just a trade. The risk, it's very high. Your target is 3 months.
Yeah, make it 3 months. Let's see what happens. Yeah, because there should be some trade coming through.
Yeah, while the trending. So, I mean, maybe it's targeting sort of 0.49 cents.
Makes
It's
sense.
a little bit under. And you've got a and your stop loss. This is the interesting one. I think you could go just under 30, keep it really tight. I mean, that works quite well with that daily. Say you could go 28 wolf.
Yep,
Yeah,
that's fine.
0.2. I might just put that okay on a weekly.
Yeah, but remember, these things are notoriously, they could be very volatile. So just be careful with it. This is a punt. So if it's not working out for you, just get out if you like a bit of a punt.
Right, it's one of those punts that you can
Could do quite well, but might not do quite well. You just never know. You just need FOMOs to basically back it.
Yeah, it might be easy just going to the casino, actually, really. Putting the money on red or black, isn't it?
No, it's not that bad. We don't punt on casinos here, but they've got some fundamentals behind them. Red or black, there is no fundamentals. You just hope. But it does, things like this do depend on other investors getting behind this, really.
I'm only joking. All right. Something that's a little bit more serious, though, is CBA. Now, talk me through the announcement, Wolf.
Dave, we've seen already 3 banks report, right? We've seen ANZ, NAB, and Westpac, and they were all okay. I mean, the initial reaction on NAB was ridiculous, right? Then ANZ, they thought, well, that was stupid on what we did on NAB. And then yesterday, Westpac was up. So at the end of the day, I think, like I spoke yesterday about it, it's all about dividends, really. So when I see negativity in the banks or, definite weakness or cyclicality where it's on the bottom, I'd tend to go, if you're looking for a dividend play, that's the way to gravitate towards it, because dividends usually are pretty good anyway on the banks. They don't go down from 8% down to 2%. They usually stay around the 5-6% anyway. So for me, I don't mind, even though they all are saying that we're going to batten down the hatches. It could be a bit weaker next 6 to 12 months. We've seen this before over and over again. So I'm not too worried about it, because you're just really just trying to strip the dividends out of it.
All right. SND. Wolf has had a great chart for a while. It's sort of dipped a little bit, but again, this is lightly traded. I'm just looking now. If you want to buy the stock, you've got to pay 113, which puts it over trend. So maybe you could excuse the chart a little bit. My question is, the announcement, did you like it?
Yeah, look, acquisitions are generally, for me, frowned upon. But if you do it not a great pace, in other words, pick your targets carefully, spread them over some time, then I don't mind it, because that obviously can outgrow for sure. And we've seen some really good acquisitions that transform some companies. So I'm not completely against it, but I just don't want to see 10 acquisitions in a year, because that's just probably going to be a silly thing. So S&Ds looks like a pretty good acquisition from the first glance. The problem with these lightly traded stocks, if you don't have investors behind it, it could look like this, where it's just a little bit below trend. I just need a bit of a push from someone to get back over the trend. So yeah, it is a tough one for me, because like I said, Dave, it's below trend. I don't mind it. Fundamentally, it's trading on 13 times, dividend for 4%. So overall, fundamentally, I'm okay with it. But you're going to say just a little bit under trend. Do you just wait till more people come towards it and buy it, right? I don't know.
Yeah, I mean, I think it's a difficult one. I mean, if you play it strictly, you buy it over the trend line. But
I think at the end of the day, just put it on your watch list, right, Dave? Put it on your watch list.
Yeah, see how it goes.
Yeah, exactly. If it gets over that 110, we'll look at it, because we still got plenty of other stocks to play with, right? That's the beauty about it. It's not as if we got to go and rush into some stuff like that.
Well, Wolf, I'll tell you what you see time and time again, though. Stocks that have had a 3-year run will go sideways for a year or year and a half, right? So I don't think it's any hurry. Now, HAV, So this was actually a hot stock, Wolf. That hasn't turned out to be nearly as hot as we hoped.
Yep.
And the reason being is that there was an agreement with Oz Minerals that we're going to buy their mine more than market cap. It all made sense. There's been some Oz Minerals have done some more drilling. That drilling has been very successful compared to the previous results.
Correct.
So it's a good sign.
Oh, yeah, it paints a positive picture, right? That Oz Minerals are interested. Whether they're still going to go ahead with it, still, it's still up in the air. That's why I suppose it's languishing. People are going, okay, I could sit in there for 12 months and see what happens, or I can be punting on POLs, for example, of the world. So understandably, if you're a trader, there's no need to sit in there. You'll come back to it when time comes.
All right. Listen, Wolf, on that note, I'm going to leave it there. And thank you very much. We've got 2 ideas today.
Yeah,
pretty difficult market. Now, like I said, guys, we're not panicking yet, but if those indices start going below the water level, that little bear behind me that you see is going to be a little bit more. Ass. Yeah, it's going to be a little bit more significant. Yes. Yeah, I might have its
headlock on top of your
actually, it might actually have its mouth over my head.
Yeah.
On that note, Wolf, thank you very much. Brilliant as always.
Join us tonight.
All right. Thanks, Wolfie. Bye-bye.
Bye.